I'm going to share with you today my price target for Forex for 2025. And also towards the end of the video, I'm going to show you how you can fractalize the Goldbach dealing ranges to really understand how price is delivered mathematically using Goldbach. Now, I've never seen anyone else use the same level of mathematics and the precision that Hoppy does. And the fact that Hoppy remains anonymous, nobody knows his name, nobody has ever heard his voice. Maybe he worked in the industry and was part of the crew that designed the original algorithm because the mathematics is just too precise. So let me show you how you can predict what the price targets are for GBP USD. Now, if you are brand new to Goldbach, there's an introduction to Goldbach linked in the top right of this video. And if you would like to understand the indicator, that is linked in the top right also. So the first thing we need to do is determine the power of 3 dealing range that is running for the time frame in which you want to trade. The additional insight is if you work out the higher time frame algorithm that's running on that power of 3, it gives you your daily bias for your lower time frame trades. Okay, so this is the monthly chart, but let's load up the indicator first. So the indicator I like is this one. And based on the volatility of the candles, I know that the power of 3 that's running for GBP USD is the 2187. Now, people keep asking me what power of 3 is running. It depends on the time frame you're looking at. So if we are looking at the weekly range for GBP USD, it becomes pretty apparent that we are running the 2187. Now, algorithm 2, as I have taught you many, many times, is the easiest one to spot. And if you would like an overview of algorithm 2, there's a link to it in the top right of this video. But it essentially goes from the rejection block down to the breaker, retraces back to our fair value gap. That's where we get our entries in the fair value partition. I also have a video that relates Algo 2 to the 2022 YouTube model. Go find that yourself. There's too much secret sauce in that one for me to link it publicly. You'll just have to find it on my channel. So from the fair value gap, and then we terminate at the opposing order block. Okay, so what did we have? Okay, we have a stop run into the extension first. Stop run into the extension. This is why I generically say the start of the algorithm is the high. Okay, that is good enough. So we go from the high to the breaker. Okay, so what did we have here? We have a stop run, taking out everyone who was prematurely short into the extension. Now the extension serves a very specific function. And if you would like to learn more about these levels, there's a link to Hoppy's book in the description to this video. So stop run into the extension, which is essentially the high of the dealing range. And then we are looking for a retrace to the breaker. Okay, price is falling, price is falling, price is falling. Where does it hit? Okay, this is the breaker partition. It touches the breaker level. See that? Just touches the breaker level and it retraces to the fair value partition as per Algo 2. And what did price leave in the fair value partition? We have, of course, a fair value gap in the right place. Now, I've spoken about this many times. We do not try to take entries in the fair value gap that is in the extension. It's not the same thing. You want a fair value gap in the fair value partition. So we had high, breaker, fair value. Now, where do we expect the algorithm to terminate? At the opposing order block level. Okay, this is where the bullish order block will form. That's why we want to get out there. Because what does a bullish order block give us? A chance for a reversal, i.e. a market maker model, running both sides of the Goldbach dealing range. So in terms of higher time frame trades, what could you have taken? Very similar to all my other Algo 2 videos. Okay, you would have come in at the fair value partition. So here, okay, as soon as this gap was left, and what did price do? Let's make sure you can see it. It touched it exactly. Touched it exactly, which is where we would have come in. Stop loss technically you can put it here, but sometimes you get a wick to fully fill the fair value partition. So you can either put it at the high, at the top of the order block, because we should not violate the order block. Okay, we can wick into it, but we should not violate it. Or if you're feeling very aggressive, you can put it at this consequent encroachment of the order block level. And then where do we want to take it off? We essentially always want to be selling in a premium and buying in a discount. Where is the first place that we have liquidity in a discount? Right here, conveniently set above equilibrium. So you can take your partials here and you can leave your runners to either the top of the order block, consequent encroachment of the order block, or the bottom of the order block. I would not put it at the low. It doesn't have to run the low. Okay, you can reverse anywhere within the order block level. So consequent encroachment is usually fine. If you've taken your partials here, then this is a nice runner. This would give you a 7R trade. Now, the additional cheat code I want to share with you, this is the 2187 dealing range. And everyone asks me about the extensions. What do the extensions do? Okay, what is the purpose of the extension? The extension is to manage stop runs of the high of the dealing range to get everyone out of a trade who was prematurely long. But that is also a Goldbach dealing range. So if the main dealing range is 2187, the size of this dealing range is 2 less. So it's not the 729, it is a 243. So let me mark it out for you and just show you. This is the extension. We then go back to when price was in this area and load up the 2187. Oh, the 243, sorry. Do you see that? The 243 is fractalized Goldbach dealing range. Now, what did we have in this fractalized dealing range? Let's drop down to maybe a 4-hour. Let's see if we can spot an Algo 2. Okay, so this is the 4-hour. So I've told you many times, Forex likes the 243 on the 4-hour time frame. What do we have here? Stop running to the low. We have, this is the fair value partition. Let me delete this so you can see more accurately. Okay, there's your fair value gap. Okay, in the fair value partition. So you would have had a very similar trade. As soon as we've got the breaker level, I'll be looking to enter here. We can take it off here. And that's what we had. 8.6R trade, market maker model. Runs both sides of the dealing range. Do you understand what a market maker model is now? Okay, it's not an arbitrary up and an arbitrary down. It runs a Goldbach dealing range. And this is very familiar for those who trade market maker models. Have a look at these highs. Very familiar. You'll see that it didn't give an Algo 2 on the way down. Algo 2 on the way up. The way down is always quicker. That's an Algo 1. If you would like to learn my time and price golden bullet trading strategy, which I use for all asset classes, index futures, Forex, crypto, metals, and energy, there's a link to my mentorship below.